Hey everybody, Josh Sayerson of World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. Now, Ron Paul recently made this statement on his show, Ron Paul Liberty Report. Check it out.
But she is right. Real wages are down right now, and they're down, more sharply than the GDP. Debt is skyrocketing much faster than the GDP, and there's evidence now that department sales are down and restaurant sales are down. So there's a lot of sign of weakness. So this is a lot different than 2008. A lot of people think, well, when we have this bust again, they keep thinking of the last recession. But I think it'll be different. I think there's signs now that we're more likely to have stagflation or a inflationary depression because we see prices going up, consumer prices and producer prices more than they want to admit, and they don't really have any tools left. So I think we're going to see prices going up because we see them already creeping up. But gold is a signal too. You know, if the people who buy and sell gold looked at this and say, hey, you know what, this is going to be good for the traders in gold, so gold goes up $30. You know, this sort of thing. So I think she was absolutely right from their interventionist viewpoint that they're not even following their own rules and they're just sitting and crossing their fingers and yelling, keep saying, nothing is locked in stone. We can change our mind anytime we want, which is absolutely true. And then they wonder why there's uncertainty. The only thing that is a little bit baffling to a degree, and that is the exuberance in the stock market. And that comes from, it's not like it's fiction because it's based on hope that Trump will accomplish, some of the things that he says, the good things, not the increase in the deficit and not war and things like that. But he's claiming that he'll spend money on military, stimulate the economy, spend money on infrastructure, and he really is not worried about the deficit. And the markets look at this and say, this looks pretty good, along with cutting taxes. So if you if you increase spending in certain areas and you don't really cut anything, he lists at the things he might cut, but this will lead to better times. And people, I think the Trump euphoria is a market reality, but just as fast as it came, it can leave as well.
So there you have it. We see Dr. Ron Paul once again predicting that we are headed towards an inflationary depression or stagflation. Now, for those that don't understand what stagflation is, it's basically a high rate of inflation while economic growth is slow and there's high unemployment. Now, I think that what he's getting at is something that a lot of people are very worried about, and rightly so. We've seen the signs for a long time that we are heading towards the cliff, the precipice. But I find that a lot of people pass it off as, oh, well, there goes crazy Dr. Ron Paul again, claiming that there's going to be an economic crash. There goes crazy Ron Paul again, making these predictions he's been making for so many years. The thing is, he's been rightly predicting it for all these years. It's just fundamentals are off the table. Because of the level of manipulation in our monetary system and in the markets, you can't put a date on it. You just know it's going to happen. So, John, let's kind of go into the insanity of what we might be headed toward and how Ron Paul might be right about this stagflation that we are nearing by the day.
Yeah. Well, first of all, when it comes to the stagflation, we're talking about, high inflation that is followed by, slow growth in the real economy. Now, first of all, we've been in a kind of a, not a stagflation, but a depressionary scenario ever since 2008. I said the greater depression we had it since 2008. A lot of people have said, oh, no, we're not in a technical depression yet. Yeah. But I believe that we've been in a definite depression since 2008. Now, of course, there's things that are pointing towards what Mr. Ron Paul is saying about the stagflation with the high inflation era. And one of them is, of course, the U.S. bond market. Now, what is happening there is, of course, people are starting to sell off the United States bonds. And we've seen, Saudi Arabia, China, Japan, and others, selling their treasuries. Now, what happens when that happens is, of course, that money now has to go back to the United States and suddenly you are hitting inflation, and money actually coming back. It was printed, en masse, but of course the money in the United States wasn't that bad. But now, as people are eliminating debt, they're actually pushing that money back into the U.S. markets again, and there you go. There's the inflationary scenario that number one that he's talking about. And of course, when you hit another crash in the markets and so on, of course the central banks are ready for a QE4. Now it's just been passing around the ECB and the Bank of Japan. You could just clearly see how they're just passing the ring around of printing and buying assets out of thin air. Like, for example, the U.S. Federal Reserve has $4.4 trillion worth of assets that they bought that was terrible investments, and they have zero exit strategy. They're not going to be able to get rid of those terrible investments. Now, of course, the U.S. dollar has dropped. We all know that. The charts we could show you. Oh, it's basically worth nothing of what it was initially. And then I think the other important point to make here, while M2, of course, is going up, which is basically all debt that is created in the United States. Of course, there's the M3 that they don't even talk about anymore because they don't want to mention that high number of debt that is getting created in the banking system. The thing is, they're creating more and more of this M2. Well, the problem is, and we'll show you a chart here, which is quite revealing. Since the 2008 crises, what have happened is that the velocity of that money, which means like how fast it changes hands in the economy, has gone drastically down. And what this is the M2 is basically, people and corporations, getting into debt, doing their share buybacks. They're pushing the money into real estate markets, pushing up real estate prices. They're pushing up, of course, margin debt into the markets when it comes to the stock market. It is actually at a historical low. It's about 1.48 right now, which is massive. Like the lowest since the 60s was about 1.67 something. So what that means is basically the money is touching very few hands. It just goes into the big elites all around the world. The big corporations, they're taking all this money and just spending on themselves to prop up their prices, basically printing money and then creating nothing of value or innovating anything. And nobody else is touching that money. It's not getting out into the market itself. So there you go. That's also another point of, there's an inflation in the M2 in massive amounts of corporate debt and other debt in the economy, but there's nobody, spending it into the economy.
And on top of that, we have government GDP going up while private GDP goes down. And something that Ron Paul also mentioned in the video that we haven't shown you is that he went into the fact that interest rates have been lowered a couple times in the past year, despite 11 years in the past of no growth in the interest rates, which shouldn't be manipulated in the first place. However, it was only a full percent, not even a full percent, over the couple of times that they've raised it a little bit under Janet Yellen. So we have this artificial monetary system. We have an artificial market. And he also kind of went into gold. So here again, we have to get to the fact that we've mentioned many times before in our videos is that, banks like Deutsche Bank, banks like HSBC, Scotiabank, BNP Paribas, all these banks have been caught red-handed manipulating the price of gold and silver.
For the ESF.
Yeah, as well as the ESF. Yeah, for the ESF. And, I mean, it's been in a bull market since 2012, but it's been in an artificial bear market instead because of this manipulation. So a lot of the insurance that people look to historically to insure their wealth in the case of these economic downfalls, which are going to happen one way or another, they look bad to people. People are running away from gold and silver thinking, oh no, it's going to do badly in the crash. But in the meantime, it's being manipulated. It's being pushed down to that price. And the thing is, it's kind of like pushing a beach ball underwater, because you keep pushing it and you push it, and eventually it's going to bounce up out of the water. And that's exactly what gold and silver are going to do in the long run.
Well, the thing is, first of all, the price that you're looking at is so heavily manipulated through a massive issuance of contracts that they
Yeah.
have, into the market. Gold is somewhere around 500,
Yeah.
contracts to one physical metal. It's insanity. It's like bigger Ponzi scheme that ever the fiat currency system was when they had a gold-backed currency, when they backed their currency
Yeah.
somewhat with gold. We're living in insane times where people are desperately wanting Trump to be able to save the economy. The problem is they ran it, like these banksters and central planners have ran it into the ground, and there's no way, unfortunately, that Trump can revive it back to life without actually starting from scratch.
That's what I did a report on a couple months ago on Ron Paul's announcement that he does believe that there will be a significant dollar crash in the near future. He can't put a date on it, like we've mentioned. You can't because of the level of manipulation. But he says it will happen, and there's nothing that Trump can do about it. Of course, what we got in return for posting that video was a bunch of people in the comments saying, you're bashing Trump. You're saying that he's going to crash the economy, because apparently people can't spend a few seconds actually watching the videos. But basically what it is that Donald Trump has no say over this. The Federal Reserve prints currency out of thin air, creates debt as it devalues the dollar, and it creates inflation, the hidden tax. And it continues perpetually like this. It happened under the gold standard when they printed more paper than they had gold, and that caused inflation, that created debt. And now they're doing it, since the 1970s under Nixon, they've been doing it under fiat currency. Just absolutely nothing. It's thin air. It's absolutely invisible. It doesn't exist. It's just faith. And that faith is dwindling, and for good reason. And the economy should have crashed a long time ago. The only reason it hasn't is because it has been manipulated to death. And eventually that level of manipulation continues to build up that level of weight on top of it. And eventually it's going to all come collapsing down. So this is a problem that we need to continue talking to people about, because they don't understand it. And I understand why people don't understand it, because the lingo, when it comes to even the most basic forms of economics, is absolutely ridiculous. It's made to make people run away from it. It's made to seem dry and mind-numbing, when it really is extremely simple.
Well, even I talked to a friend of mine that's a forensic accountant, and he said it the best. Most people that are in the financial sector are so compartmentalized. You got the PhDs in economics. They know a tiny little bit about the world, like their little tiny little bit of world. Then you have the accountant knows a little bit, and then you have the banker knows a little bit. But nobody understands the full picture and have actually studied history and understand how terrible it is to have this fractional reserve banking system that, you're talking about the Fed, printing money. Well, the banks are printing money en masse, borrowing this money out to elites and everybody else that, at near zero.
And then there's a level of usury and quantitative easing as well, and it all builds up. It all piles on.
Yeah, it comes down to when you have usury, that it's not necessarily terrible, but the thing is when you use usury against something that is not backed, I call it, with something of value, like a business that's going to create something or innovate something. Instead, they're getting into this margin debt, using it to manipulate stock prices. They're going into of course real estate markets, propping them up like crazy. And like Norway, also for example, is 24% gain in 1 year, and this is of course Norway has one of the lowest interest rates in the world right now to try to save their economy, because their economy is doing terrible. And it comes back to this stupid idea of Keynesian economics, that the government can actually spend money into the economy through deficit spending and then creating value.
Absolutely.
There's nobody else than businesses and private people that could create something of value in the world. Governments are useless.
Absolutely.
They just take your money.
Competition of individuals and free demand is what really stands out. And of course, this is leading on top of that towards what they plan with the SDR, the special drawing rights, to create a world currency. And that is very much on the books. It isn't a conspiracy theory anymore. It's wide out in the open, and people just will ignore it because it benefits their preconceived notions or their comfort level. And we have to get away from that comfort level, go into what makes us uncomfortable in order to call it out, call the snakes out of the den, and make sure that we get ahead of this in the long run, which is why we talk all the time about free markets, free monetary system, competing currencies. Of course, that's an issue for another time. We've talked about it many times before. But this is why we talk about this, because it's so important that people are able to speak for themselves instead of coerced into this collective by these groups of psychopathic globalists and to some degree the nationalistic central planners. We need to call these people out, because once you call them by their name, people will understand who you're talking about. If we refuse to say its name, then it will continue to grow, and our level of tolerance will be outweighed by their level of strength and power. And there's a lot more of us than there is of them, so we have to do something before it's too late. However, with that said, I do think that the economy should crash so that we can build up from a free market level. It's just people have to be educated. If it doesn't crash sooner than later, then it's going to end up being that much worse when it does.
Yeah. Well, this depression has been going on since 2008, in my point of view, and some other people as well. 2008, so we had the depression for almost 10 years now, 9 years, and counting, of course, because the reason why I say it's a depression is because they've manipulated the markets. They haven't done anything to actually save the markets by pulling away from their centrally planned system. They just double down, basically. And it's a hidden, depression, I would call it, that we got going on.
Yeah, well, we can no longer sit idly by as we're made debt slaves, because debt slaves are easy to drive off a cliff. Debt slaves are easy to push into servitude eventually when you can't afford food or water or shelter, and you have to have no choice but to go begging to the government. We have to be free, voluntary individuals, liberty-minded individuals, away from the state, away from these central planners, because it's the only way towards prosperity when we can have, I'm talking about real fairness, not the kind that socialists talk about, where it's fairness with a gun to your head and telling you collectively all what you have to do. Instead, voluntarily decide what we want to do with our own lives and trade and use our demand, our vote. True democracy is our vote with our dollar as individuals rather than collectives. And I think that's very important to bring up. So closing it off, thanks, John, for going into those charts and stuff. And we'll be back at you with much more. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated. And of course, check our link in the description, our address for Bitcoin, which we will put on the screen as well for you to donate to if you so please. So thank you very much, John. And we'll be back at you with much more. This is Josh Searson and John Snyson signing out from World Alternative Media. Find the truth. Be the change.
Thank you.